Yo, what's going on, guys? Welcome back to another video on the channel. As you guys probably saw today, a pretty ugly day for the market, as it seems the market is pricing in the potential for a double rate hike at the next Fed meeting in May. Jerome Powell did not 100% confirm that at his meeting today at the IMF, but he did say it is on the table, and it seems as though the market is reacting to those comments. The brunt of the hit today was on the technology sector, as we have been seeing, which is a common reoccurring theme. And today I want to go ahead and break down the Nasdaq for you. It is sitting at a crucial level. If this level breaks that we're going to talk about in today's video, I see a lot more downside coming. If we continue to get this weakness in the technology sector, then the Nasdaq definitely has some room to the downside. Other sectors, specifically energy and consumer staples, continue to hold up pretty well, which is helping the S&P 500. We'll go ahead and break down the S&P 500 as well, and I'll share with you guys how the S&P is definitely outperforming and also how the Dow Jones is outperforming all three. We'll look at the Nasdaq, the S&P, the Dow, give you guys some key levels to watch out this week because there are some major levels to watch. And if we start breaking down some of these levels, I could definitely see where the market starts to get a pretty accelerated downside move. So make sure to prepare, make sure to watch this video, look at the key levels that we're going to review. So hopefully it helps your trading into the next week. With that said, let's go ahead and jump into this video. Press that like button, subscribe, and make sure to come to the pre-market live streams where we will review all of this analysis on a daily basis starting at 8 a.m. All right, guys, so we're going to start here on the Nasdaq chart. This is the daily chart, and we're going to talk about what happened today, how it actually broke a bullish formation that I was looking to see hold up. I think it went ahead and invalidated today, and look at some key levels that we need to watch out for. So on the right side of this chart, this is the last few months. This is 2022, right? January starts here, and this is what basically has happened for this entire year. Over the last 4 months, we have basically been sitting in this little channel. Now, I was looking for the market to go ahead and create an inverse head and shoulder to see if there was any bullish movement to the upside coming into earnings, into major tech earnings. Today, I think sort of invalidated my technical analysis on this inverse head and shoulder. So I was looking here, if we zoom in, you guys can see that we had a left shoulder form on this Nasdaq. Right here, we had a left shoulder form right around 13,900 to around 14,000. We came down, we made new lows. We came back up, and I was thinking that potentially this could be the right shoulder of an inverse head and shoulder, which you guys could see right here. Why is that an inverse head and shoulder? Well, if I inverse this Nasdaq chart, you guys would see, if you're more familiar with the head and shoulders formation, this is a head and shoulders formation. You have a left shoulder, a head, and a right shoulder. Typically, in a head and shoulder, you would see this move back to the downside. Now, this is the inverse of the chart, so I was looking to see if this inverse head and shoulder would go ahead and create an upside move on this market. Now, as we know, guys, technicals are never the most important thing in the market, and I will always say that on this channel. I just think that as of right now, the macro factors could be outweighing this technical formation. And even though there is that inverse head and shoulder, which is pretty clear to see on these charts, the macro, the Fed, the current inflation, the interest rates, it's a lot of things that are working against specifically the tech sector, and it might be too much for this market to hold up here at this right shoulder level. Today, we wanted to see an area around 13,900 hold. 13,900 was a key base that I was looking to see hold. That was a base from back here in January, and we went ahead and definitely rejected that today. You guys can see we had a pretty ugly candle close well below that 13,900 level, and we can see that that is where we ended right around 13,700. Now, the key last resort level that I am looking at but don't really have much confidence in, I will say, is the wick low of this January 24th trading day. The wick low of this January 24th trading day was 13,706. So if I go ahead and put that line at 13,706 and we go ahead and zoom back in, we can see that that was the wick low of this January 24th, and we just barely held on to that level at the close of today. If we go to the 1-minute chart, you guys are going to see that that is just where we stopped the slide at the end of the day. Does that mean that I think we bounce off this level? I don't believe so at this point. I think the macro factors are going to continue to weigh this technology sector down. And even though that is interesting, that is where we sort of tried to hold that 13.7 level, do I think that that is a strong level? it's not something that I would be specifically trading to the upside off of. No, definitely not. So you do have that last 13,700 level that's on your charts. But if we drop this level, if we confirm a downside move under this 13.7 tomorrow and into next week, I really do not see much reason for this market to hold until 13,000, guys. There is nothing that I believe will hold up this market between 13.7 and 13,000, and that means that we are going to potentially test the lows of March. And if I zoom out of this chart, we are going to see that this 13,000 level also goes ahead and is an area of interest from back here in May of 2021. So back here, May of 2021, you had this 13,000 level, and it seems to me that if we drop this 13.7, we should see a slip to this 13,000. So 13.7 tomorrow, guys, that is the major level. It's the last level that I think could hold this Nasdaq potentially up. But overall, guys, if we look at the last few days of price action, it is definitely showing us weakness. Look at all of the wicks that created this channel here at 14,300, and look at every single time we went up to this 14.3, we have had an ugly reaction. And I think the longer we stick around this channel, the more weak we're going to get. And tomorrow, if we see that 13.7 break, I definitely do not see much here until 13,000. I'm going to zoom in real quick and show you guys the last week, and I'll show you sort of what this has looked like over the last week. So if we zoom into this chart on the 30-minute chart, you are going to see today we went right down to that 13.7, but look at how many rejections have happened at this 14.3. We just simply cannot get above this 14.3 resistance level, and every time we touch it, we get a very nasty rejection. We made new weekly lows today, so you can see the previous low of this week was around 13.730. We did close below those weekly lows, and 13.7, you guys can see it right there. That is the last line in support. That is the last line in the sand, and I think if we see that drop, we are going to be quickly moving back down to 13,000. That's my current view on the Nasdaq. If you guys, here's the 4-hour chart. This is your 13.7 wick low. This is where we closed today. It's right at that line. And basically, if we confirm downside under that, I don't see much reason for the market to hold in this green area. I think you move back down to that 13K. So here is the volume profile on the right side of your chart. This is the 4-hour chart, and you guys can sort of see what I mean by not much support below that 13.7. Under that 13.7, look how drastically this volume declines down on the volume profile. So this area under 13.7 has very little volume, and if we start to slip into that low volume on the volume profile, there is not going to be much to hold up this move. So the volume profile is just sort of confirming my thoughts that if we get into this zone between 13K and 13.7, that it will be a relatively quick slip to the downside, which could happen tomorrow, which could happen next week. Of course, we could see some type of sympathy bounce tomorrow, which is totally possible with what we've been seeing in this market. It's been very channel bound, very volatile. So if we get any type of fake bounce tomorrow off 13.7, I would still be someone looking to play that rejection. So 13.7, if anything happens tomorrow, we could see a little bit of upside in the pre-market tomorrow, just off sympathy, just off after a very extended downside move. If we see that, I think your best bet is to look for rejections and look for more downside. What I would be looking for in specific, if we go ahead and return this volume profile off, I would be looking for a fake push to the upside on the Nasdaq up to this previous low right around 13.9, and I would be looking to play a rejection off this. So I'm looking for something like this, fake bounce off 13.9, and then a continuation to the downside. So that's the Nasdaq. Let's go ahead and jump into the S&P 500, which is slightly outperforming as of right now. All right, guys, so here is the S&P 500, and why I say it is outperforming is because if the S&P was equal with the Nasdaq, it would be back down to these previous lows right around 42.65. That is the left shoulder of the S&P 500 right here, which also sort of confluenced with this previous low back in October. And if the S&P was just as weak as the Nasdaq, then I would expect it to already be trading down at 42.65. But what we see is it still is slightly extended here, still is slightly outperforming, and I sort of warrant that because of the XLP strength that we've seen, the consumer staples, the XLE strength, which we have seen, which is energy. We also have the XLV, which is slightly outperforming. So the S&P 500 definitely has a little bit of diversification, which is helping it at this time. But ultimately, if the whole entire market, if the tech market continues to fall and brings down some other sectors with it, then the S&P could potentially move lower to this 4265 level as well, which is the October lows, which is also those January lows. Now, the one level that's in interest right now, which we didn't quite break, is this pivot level around 4380. So if we go ahead and put a level at 4380, guys, on the S&P 500, and we go to the 4-hour chart, you guys are going to see that this 4380 level is the level that the S&P 500 is trying to hold on to. So right here, I'm going to go ahead and remove the moving averages because they're really just noise at this time. So here it is without the moving averages. Here is your previous highs, your previous resistance from early March, late February. And you can see this is where the S&P is trying to hold on to, right around this 4380, which we did hold on to at close today. So you can see at close today, 4380, it barely held on there. And that is very similar to where the Nasdaq barely held on to that 13.7. If we zoom in and we look at this level, I think if we give up this 4380 tomorrow, I think it's the same sort of concept. You move very quickly down to the 4265 on the ES. So similar charts on the Nasdaq and the ES. However, ES is slightly outperforming here because of some of the diversification. If we drop the 4380, I think you move down to the 4265, which is similar to if we drop the 13.7 on the Nasdaq, I think we come back down to the 13,000. I'm going to go ahead and pull up the volume profile, which you will see is very similar. There is a shelf of volume here, and if we drop this shelf of volume, I think you are going to potentially move lower, guys. So here, you guys can see the shelf of volume that sort of ends right around the 4380. We start to get that decline, and even further, if we get under that 4265, there's a very heavy decline in that volume profile. So the volume profile sort of confirming my thoughts that if we drop these crucial levels on both the ES and the Nasdaq, that we are potentially seeing a pretty big potential void in price action, which could bring the market down relatively quickly. So as I said earlier, technicals are not everything in this market. I like to look at technicals because it can give us some insight in what could occur. But we have a few things, the macro side of things, the high inflation, the interest rate hikes, the Fed meetings, which is panicking the market. And then on the flip side, we still have that question mark of corporate earnings. We have very large tech stocks reporting corporate earnings next week. That could put a whole mix up in this entire plan. So overall, the technicals are showing me a few things. The macro side of things is showing me a few different things. And then we have corporate earnings coming up. It's a lot of indecision. And usually indecision leads to downside. So right now, I am definitely on the side of being a little bit more bearish than usual. I don't like some of these setups that I'm seeing. The volume is definitely showing me that there could be downside, and some of these key levels are testing today. They could break tomorrow, they could break next week, but that is my major watch right now, guys. These major levels that I am sharing with you in this video, if I start to see these levels break, I am definitely going to have to look for that downside, as I don't see much support under that 4380 on ES, and I don't see much support under that 13.7 on Nasdaq. Of course, like I said earlier, we could get some sympathy bounces. For all I know, we could bounce right back into this previous resistance at 14.3. The market's been very volatile, but I wanted to make sure that in today's video, I shared with you guys these key levels to make sure you have these on your charts tomorrow, because it's going to help you when you're trading, and it's going to help you make better, educated decisions on a longer term time frame. Don't get tunnel vision. Make sure you are looking at these charts on the daily and 4-hour to make sure you get the longer term analysis, the longer term view on the overall market. So guys, that is what I have for you in today's video. I know it is just a technical analysis video on the overall market, but I think this is very important heading into tomorrow. I hope you see this before tomorrow, and I hope this gives you some insight into what levels to watch out for. If you missed this video, we're going to talk about it in my pre-market live stream tomorrow, and I'm sure in the future videos as well. So make sure to stay tuned to that. I hope you guys have a great rest of your day. Thank you for watching, and I hope to see you in the next one. Peace.